Frank, hold it steady. I'm gonna put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Oh, yeah, sure thing. You didn't leave the keys in the spaceship, did you?
Yeah, I did. Why?
I think someone just stole it.
Oh, gosh. You know what? Whatever. That was kind of a last month thing anyways.
I think I just saw Santa walk past the window.
Frank, the food! You left the oven on!
I'll get it.
You're both here? I could have sworn I saw your ship fly by.
I don't want to talk about it.
It was Santa's sleigh. Jerome, so happy you could make it. How's your day been?
Just close the door.
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
All right, everybody, welcome back, and thank you for being here with us. We are back in the office. You know, I actually made some additions. Let me see if Chandler, could we try and go full screen for a second? I have a little thing I added to my setup here, right here. This is my family gave me this for my birthday. Kind of cool. So check this out. We'll go, hold on. Right here. Check this out. This is actually a clock, and it's like winding around. The lights are kind of blaring, but it's pretty cool. We got the office set up here, looking slowly a little bit better. I just have so many trinkets. We got the trading view sign, the trade-in view sign, because the G seems to have died on us. But got the sword, of course, in case we need to smite anyone. And yeah, anyways, let's jump into some markets. Good to see everybody. Thank you for being here. We got people in the chat asking for euro dollar, gold, S&P 500 requests. So we will be taking a look at all of it. I do want to start out by just saying one trade that I am particularly interested in this week is a retrace on the oil market. This is a daily chart. I think oil prices are they're trending lower, and I kind of expect that to continue. We will see if that does play out. But my thought process with this would be I'm still bearish in oil from the concept being markets are seeing the economies around the world slow right now. There hasn't been a big revival in the Chinese economy as many had thought there would be. Overall, consensus is economic data is slowing. And as we always talk about, fundamentals of oil, demand versus supply is everything. And if the economies around the world are slowing, demand we would expect to kind of fall. By the way, OPEC, the OPEC nations, which of course are a lot of oil producing, a lot of Middle Eastern and countries that are exporters of oil, they can't seem to all agree on how much they're going to put out. And so there is not necessarily a huge crisis of supply, right? Which is sometimes offered. Sometimes they put together agreements so that the price of oil will go back up. They all limit their supply outputs, right? They agree to do that. Because of course, if supply is an issue, then of course demand could go back up. Right now, we see the opposite scenario. And so as long as this condition stays, I am pretty bearish on oil. And so where do I get bearish on oil? Well, that's where we get into the technical side. So fundamentally, and by the way, EDGEFINDER has a nice confirmation on oil. Not a market that I trade that frequently, but when the EDGEFINDER gives it a -6 and fundamentals to me make a lot of sense right now to the bearish side, I have extra confirmation. I'll be looking for shorts on oil as we go into this week, watching that one close. Again, a retracement probably to the 38.2 or 50%. These are pretty significant levels on the chart. You can see I've got my previous low marked here where we basically found huge support, but eventually broke through that level, and it was a big moment. So if price retraces, I do kind of like the idea of getting short oil. And if I take that trade, of course, I will share it inside of our VIP group. If you're not already inside of the VIP group, then you can join. So if you're not already in there, let me just share what that looks like really quick. If you're not already in the Discord, come join us. It is currently a great time to join as we have CPI tomorrow, which we got to get prepped for CPI. Stick around with me here today. We're going to be taking a look at fundamentals and technicals ahead of tomorrow's really market moving news, CPI, which is probably even more, arguably more important than the December Fed meeting that we're going to have this week as well. CPI is probably more impactful because it's pretty expected that the Fed is going to do nothing this week. But CPI will give us kind of a look ahead as to what they may be doing in the new year. So markets are going to react to that. By the way, if you guys would like to get access to the signals being shared by myself, Frank, and Ivan, you can join us by shooting us a DM. Send us a direct message on our website. If you click that link, it takes you to our live chat support where someone on our team will get you hooked up with a membership. We'll give you all the pricing options. We have a monthly, a yearly, and a gold membership option, which is a one-time payment to join. If you'd like to join us, this is a great week to do so. Markets are going to be moving. We're going to be trading it for sure. And I'm watching for, to see what happens with my S&P trade. I definitely am keeping my eyes on some commodities, gold and oil, especially interesting to me this week. So we will be discussing all of that. This is just a shout out. If you are thinking about joining, this is a great time to join because this week is very, very meaningful. And I just want to say a lot of times people completely avoid news. Over here, we do not avoid news. We lean into news. We trade news. Now, I'm not saying we trade the spike. I think that that's just pure gambling. What I'm saying is that we use news as a catalyst because we're fundamentalists inside of the group. Frank, Ivan, and myself, we all use a mix of technical and fundamental analysis. So if you're somebody who acknowledges how powerful fundamentals are and you'd like to learn more about them, this is a great week to do so. Come join us. Again, if you send us a direct message while we're live, we'll give you extra discounts for supporting our live stream. So message us. Someone from our team will get you hooked up with a membership ahead of the CPI event so you can trade alongside with us. All right. So again, I like oil on the short side if it can pull back. I want to take a look at the dollar index. Dollar index, surprisingly strong. However, we have a big week ahead. Again, tomorrow, we can pull up Forex Factory to discuss this at length. Pull this full screen here. By the way, this 10-year bond auction could be market moving. Bond auctions, any surprises there can actually cause some volatility. So look out for that. Tomorrow, again, like I said, we have core and headline year-over-year CPI. This is going to be the measurement of inflation. What we can see is forecasts are for inflation statistics year over year to get down to 3.1%. Now, again, what does this tell us? Why is this meaningful? Well, inflation coming down, which is, again, previously we had 3.2. We're looking for 3.1. If we get that disinflation trend to continue, that is going to likely lead the Fed to rate cut potentially sooner. And rate cuts are a very stimulating thing for the stock market, for the gold market, for the commodities world, right? It is essentially, instead of tightening, we're finally seeing some loosening. If that does start to come into play, the question is it coming midsummer, or is it coming earlier, or is it coming later next year? And that is what the market is going to be watching for tomorrow. And that's why CPI is such a meaningful figure tomorrow. And that's why you will get some spikes one way or the other. We'll be trading that live, by the way. Make sure to tune in. We'll be live tomorrow at 8:15 a.m. U.S. Eastern, going in on the CPI number and reacting to it live. So make sure to tune in for that. And again, if you're not in the Discord, we will be trading that tomorrow and today. So come join the VIP. It is the time to be in there for sure. What happens on the auction? They sell bonds. And a lack of demand for bonds can be very scary. And yeah, so not saying that there will be a lack of, but there has been a little bit of instances here and there where bond auctions have seen a little lack of demand for bonds, which can be very, very scary to the markets. Anyways, like I said, in terms of dollar index, I'm still bearish. You're seeing price retrace back up to this 104 level. It seems to be kind of stuck here. But if we look left, again, this has been a key area of structure, and I would generally expect price to continue lower. If again, with CPI tomorrow, we'll get a confirmation there. I just want to say, we don't know what that CPI number is going to be. That CPI number could be hotter than expected or cooler than expected. If it does become hotter than expected, it's likely that the dollar index, in my opinion, would trade back up to like 105. Okay, so let's talk CPI here for a second. Now, if you're trading gold, euro, pound, S&P, NASDAQ, silver, oil, all of these markets will react heavily to CPI tomorrow because the dollar is so meaningful to all of them. If CPI is hot tomorrow, hotter than expected, it's likely that the stock market will drop, that the, well, I don't know. We'll get to the stock market in a second. It's likely the dollar would rise, right? Hot inflation statistics would say, oh, the Fed probably not going to rate cut for a while, higher for longer, ... dollar higher. However, if CPI comes out tomorrow and it is cooling as expected, I think the dollar continues its downtrend. So I think if the dollar, I think if CPI is as expected or less than expected, both of these scenarios, I think we see a dollar drop. Now, again, we don't know what's going to happen with CPI. We're talking about game plan. And I think this is what's so important when it comes to markets, when you're talking about this stuff. We don't have a crystal ball. We have to kind of game plan for any of the scenarios. So I think most likely tomorrow, as long as you get in line cooling numbers or less than expected CPI, I think the dollar downtrend is intact. The only thing that threatens the dollar downtrend, I think, is really hot CPI numbers tomorrow. It's probably the most meaningful piece of information that we're going to get this week. And yes, we do have Fed commentary. I think it's on Wednesday. Yeah, on Wednesday we have the rate. We have economic projections and a statement from FOMC. So yeah, it could be market moving for sure. But again, I think that the big one this week is CPI, because CPI is just a straight figure telling us how the progress has been on the inflation problem. And if it continues lower, again, I think what happens is I think you see the dollar drop. And I think when we take a look at stocks, the stock market, S&P, NASDAQ, Dow, I think that if that inflation story stays intact, we see a rally. And actually, I think to point something out, jobs were pretty dang good. Jobs were really strong. So if we had strong jobs on Friday, and I'm talking about NFP strong on Friday, but then we also get cooling inflation, the stock market's going to absolutely love that. And that might be your Christmas rally. As if we haven't already had one. We've had a monster move. I'm still long S&P. I've got my two positions still open. SPY, VOO, both of these are, of course, S&P 500 positions. You can see this is the trade, still in it, and this signal has just been just a monster move. This has been, for me, at least, the trade of the year. I wish they were more frequent. I can't pretend that they are very, very commonly like this, but when they happen, they're very, very nice. I think it's time we talk gold here a little bit. We've got gold pulled up, and you know, they tried to warn me. Tom and Frank last week tried to warn me about this big rejection. And although I did I take one loss, I tried to buy the pullback. Obviously, in hindsight, I look like an idiot. But I tried to buy this pullback here. Didn't quite work out. And I'm glad that I didn't try again, because it does seem like we've lost that momentum for the time being. And again, we popped briefly above the all-time highs and remarkably have dropped over $150 an ounce in like 7 days, in like a week. It's just remarkably bearish all of a sudden. And again, to my surprise, I thought we would see price fill out this wick. I was totally wrong on that. Wouldn't be the first time or the last time that I will be wrong. Please know, I try and say this frequently. Anybody that you see on this show, whether it's me or one of my guests, none of us are perfect. Markets are not predictable like that. New traders sometimes think like, oh, if you get it wrong, you must be an idiot. And the reality is you don't have to be right all the time to be a decent trader. That's the cool thing. You can be wrong frequently and just catch the right moves. And when they happen, make them count. And again, you can come out on top. Regardless, in terms of gold, we have to be clear here. This level of support, that was my line in the sand for bullishness, and 2000. Unless we get a strong reversal intraday here today, 2000 looks like it's falling apart, and that's going to be a tough position for gold. I think we don't have, gold is neutral on the EDGEFINDER. So we're not getting any confirmations there. In a second, we'll be taking a look at COT data with Frank. That'll be good to go over. He pointed out something as we were leaving last week that I'd like to point out, the S&P, et cetera. So we'll talk about that. But again, gold kind of falling apart here. And what's the next target for gold? So Mohammed, I'm not really bullish or bearish on gold, but the fact that this thing closed underneath on a daily chart perspective, well, it hasn't closed yet, but if it closes, let's say it closes like this below market structure, I mean, the next key area of support is down in 1930. And maybe we'll look back at this in a few weeks and say, wow, was this just one big fake out, one big bull trap? And we'll see. Again, it trapped me once, but I have not taken another trade. I'm waiting. I was bullish, and again, with level breaking 2000, that's going to keep me out of any trades for now. So congrats to the bears. I definitely, So Ivan says he warned me. He warned me indeed. I had several people warn me. But at the end of the day, to be completely fair, Ivan, Tom, Frank, all of us, we don't trade based on what other people tell us. And then we all joke about it because there are times when each one of us are right or wrong, but you can't trade based off of crowd sentiment or comments from other people. Because at the end of the day, if you don't have a strategy tested, then, somebody else's comments are meaningless without context and strategy and stuff like that. Of course, Ivan's comments are always valuable. I'm just saying, in terms of strategy, you've got to stick to your rules, your set. Nobody else can do it for you. All right, guys, we're going to go. Speaking of Ivan and Frank will be joining us on the call here in just a second. We'll take a quick break. And then we'll come back. We're going to take a look at COT data, and then we'll have Ivan and Frank also to talk trading setups as we go into this week. And gold seems to be falling off a cliff. And just one check before we go for a break here. We'll come right back. Dollar index not necessarily that strong today, yet gold really fallen apart. We'll come back and talk about that in just a second, just after this. Check it out.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 EDGEFINDER 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap, and if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the EDGEFINDER and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
All right, and special shout out to Eightcap for making it possible for us to be here. Thank you to them. And again, guys, sign up using that link. All the details there will get you free stuff if you sign up and create an account with them. No U.S. clients, unfortunately, but for my non-U.S. friends, there are some special perks there for you. All right, we've got Frank and Ivan on the show. Good to see you guys. Welcome back.
Hey, how's it going?
Thank you very much.
Good to have you back. And I wanted to start, I promised we'd take a quick look at COT data. Frank, what stuck out to you on the COT side of things? Anything interesting this week?
Well, they're buying indices. That was pretty obvious from last week. They slightly bought gold, I guess. So I'm not sure. Gold, now that it ran too high, it also fell way too hard in that short period of time. So I don't really know where gold's direction is going to be in the short term, but I feel like it has overextended on both sides. It's kind of got to chill out before it makes a move. But yeah, so I guess what I'm bullish on isn't always, well, it's not lining up with this exactly. I'm bullish indices, but I'm also bullish Bitcoin, but that's not very, that activity last week was a majority sell. I would say overall though, it looks like risk on. It looks like risk on sentiment from smart money. I know they're buying dollar, but they're also buying everything else.
Sure.
Shorting oil. It just looks very it just looks like a very active market for risk on right now. So that's where I'm at.
Okay. Fair enough. And for those of you guys who would like to get access to the COT data, we built that report here at A1. That is what we do. We build software tools. We're a software company out of Atlanta, Georgia. If you'd like to get those tools for yourself, for your own setup, the COT data, the top setups algorithm, all of our stuff is available on our website. If you'd like more information or you'd like pricing options, send us a direct message here. We've got the link right there. You can click in and chat with one of our reps who can answer any questions for you, share pricing options with you. If you want the COT data only, if you want other things, if you want a payment plan, just message us. We'll work something out with you. Again, we've got 3 people on staff who help people with getting set up with our software. So please feel free, use that link. It's in the chat right now. Or if you're watching back at a later point, first link in the description. All right. So with that said, Ivan, you were calling me out on gold. Is it going lower now that you've called the top here? And also, I think Ivan, I think your camera's a little delayed. I can't tell if it's your internet or what's going on, but you look like a fuzzy. Frank, do you see that too? Is he a bit fuzzy?
Yeah, it's a little out of focus.
Okay. Oh, come on, people. Don't call me out here. Don't throw me under the bus here now. Come on.
We can
Just
hear you
kidding. You look
decently, Ivan,
fine.
but
You
you're
look great.
blurry.
I'm sorry. I apologize. Can you receive my apology?
Yes, we received it.
Okay. Gold, ja. Nej, alltså what Coyotes squeeze gold squeeze is where the other side, for that matter, where you have very money to one side, and then all of a sudden you get like this pop and market falls down. So what happens when you start falling, people get out and out and out, and that creates the fall. But when you squeeze in a corner, like, everyone is buying, and then sell pressure comes in, and everyone has to get out. Kind of type of situation. And I didn't call out that gold will go into 1987. I'm just saying that, Nick, maybe you should add to that. Maybe I'm not saying, but maybe when things goes to extreme, because back in the 90s, the market started to go into what a mean, reverting back to the mean. There's a standard deviation to the market, and with that gold going up to 2150, I think that is, at least it doesn't make me buy it, if that's a thing. But I didn't call you out on, but I know that's a part of your strategy. I don't really care too much. I just say it's fun that it's lower, probably a better price.
Sure.
But
yeah, no, and I guess, at the end of the day, it's gold. I knew when I took the trade that it was aggressive because, again, you had those big spikes, and to be fair though, sometimes if you look at the great runs on gold, that's how they start. They look almost so extreme that it's like it barely pulls back before rocketing again. And so I was taking an aggressive entry, and unfortunately, it didn't work out. So we will watch to see. I still think that it has potential to go back and retest these highs, but currently the way price action is working, it's not looking very promising. Here's the 4-hour chart. It's completely broken support, no longer in the bull's control, I would say. So it's worth watching. Frank, what do you think about gold? Do you think so? You pointed out that it seemed to have gotten a bit extreme on the upside, and now you just said, as we joined the call, that perhaps you think it's starting to get a little stretched to the downside. What are your thoughts?
Yeah, so that was like over 7% drop from the highs, and that's only, I don't know, 6 days worth of trading. So
Yep.
Very hard move on gold in a short period of time. Granted, like this whole month from October to November was a big move, and then November to now up until the highs was another big move. So it did get overextended in a short period of time, but it also sold off arguably harder than it did making that move to the upside. But crossing under this trend line and support, closing underneath that, and today it's still working its way down. I think it's best not to trade it right now, not to look for any buys currently. Wait for it to hit some support like around 1939, 1940. That's another like 2% drop, I think. And then just keep looking at further lows. I don't think it'll go back into the 1800s, but I think just keep looking at support levels and see if a price is bouncing off, and try to take a chance and see if it will move higher, and then keep your stops tight. But this looks pretty bearish on the daily chart, and I think a lot of assets like the S&P, GU, EU, gold, they're all going to continue to move down, at least for today, until we get those CPI numbers. Because I was going to ask you what you thought about that, Nick. They're all coming in mixed. We have benchmark coming in lower. We have core coming in hotter, which is what the Fed looks at. And we have standard month over month unchanged. So what, in terms of like CPI, I know we all want lower CPI across the board, but what would you be happy with if we saw mixed numbers like this?
Yeah, so I think you definitely bring up a good point there, and we're gonna definitely have to pass that question to Ivan as well too. But I think in terms of inflation, last week on Friday, I think the market kind of showed where it's at. We talked about this a little bit offline, Frank. We were talking about how as long as the trend overall stays intact, meaning the economy stays alive, jobs don't completely die, and we see, generally speaking, disinflation happening, even if it's slow progress, progress is progress. I think that most likely, even if we see inflation coming out just as expected, as all those numbers are expected, I think that still kind of bodes well for the dollar downtrend, because right now rate hikes being threatened were what was so prevalent to a stronger dollar and crushing the markets, and we just don't have that same looming fear. So I think it takes a lot for that to shift both ways. Frank, you and I were talking about when it comes to jobs numbers, we were like subpar numbers or decent numbers. Right now, the path of least resistance is stocks and equities rally, and dollar drops. It has to really prove. I think the burden is on dollar bulls to produce something that changes the new narrative again. So I think unless you see something very surprising on tomorrow's data, the market's going to find a way to stay within the trend, the 3-month rolling trend of disinflation. So I guess that's kind of where I would lean. Ivan, what do you think? Dollar tomorrow, CPI, of course, probably one of the biggest movers. What do you think? I mean, to Frank's question.
I think that if we get lower than expected, we're going to go dollar bear, or market's going to go dollar bearish. If then the Fed also delivers a dovish message, or less hawkish, I think the move is going to be Tuesday, and then Wednesday kind of dies out, maybe 50 pips extra, but it's kind of dead on arrival if we get two of the same. But if we get an opposite reaction, if we get dollar bullish tomorrow because of CPI and then dovish on Wednesday, you're going to have 100% pullback and back to square zero. But then you have ECB on Thursday and Bank of England on Thursday, I think, far as I remember. So trading your dollar this week is going to be volatile. But I have a question. I want to put you on the spot. I know the answer. It's very easy for me to answer this question. Are you overall profitable on gold?
Overall profitable since when? Because the last few months have been terrible for me.
Yeah, okay, the last year, then 2023 for that matter.
I haven't actually looked at just my gold trading, but it's not been very good, to be completely honest. I haven't traded it that much outside of, let's see, I traded a little bit here recently. I traded down, I shorted a good bit of this. So during this period, which is what, May, summer to October.
September.
I had a good bit of short trades on this side, and then I missed completely this rally. So it's not been super impressive, to be completely honest. But overall, I would say it's like probably break even. Though I haven't traded gold as much this year as I perhaps did in like 2022. 2022, I traded it quite a bit with all the Russian invasion stuff. That was kind of a good volatile year for gold, and I liked it. But again, recently, not very impressive. I was wrong on this pullback. I was wrong on this pullback. I caught this sell very nicely several times in there, but recently just terrible. So there you go.
They laughed in your background when you said that, so I guess.
Yeah, they're out there they're not listening, but yeah.
Okay. Gold has been tough. I have to say that it
has been.
It is not for the easy. It's not for the faint-hearted, and it's not easy. But what I would like to say is, if you use it for what it's worth, long-term hold, we have gone from 1400, sorry, to 2000. That was a move back in COVID. We have gone from 1800 to 2000. That has been a move. So if you focus in that direction, that's at least my approach. It's a bit more I guess a bit less crazy, because things becomes very crazy when you see volatile market go up and down all the time. Emotions gets running high, but if you have a objective approach to it, that is what I would like people to do.
Yeah, that's a good point. And sorry, Frank, were you going to say something?
No, I wasn't saying anything. Sorry.
Oh, sorry. I thought you said I think, and I was like, oh, I think I just cut him off. I was going to just add, although I haven't traded very well recently on gold, I took this loss, but before that, I've had several good trades on silver. That silver has actually been a better performer for me this year than gold. A lot of it has been options trading. I've sold a lot of calls and a lot of puts on silver, which, if you know much about options, generally a sideways market is actually pretty good for options. And silver, although it's really underperformed in terms of gold's crazy volatility, the sideways range by I've basically sold puts, sold calls on this. The sideways action has been really good. So I've made a lot more positive returns on silver than I have in gold, at least in this year. But this year has been, again, usually I trade a lot of gold or I trade a lot of indices, and it's rare that I'm trading a lot of both at the same time. This year has been much more indices focused for me than anything else. A lot of NASDAQ, a lot of S&P. So yeah. Ivan, you mentioned the euro and the pound. Of course, with the ECB, the Bank of England, you mentioned volatility. That's probably a great point, especially with euro sitting at support. It's sitting right here off the daily chart at this 1.075 level. What do you think is going to happen this week? Is the ECB going to again? They're seeing slowdown as well. Are they going to come out more dovish? What do you think?
I think it is bad, but yes, dovish. Euro is probably going to fall more than anything else on Thursday. So maybe up Tuesday, down Wednesday, down Thursday. I wouldn't buy.
Yeah, it'll be. Week. I was going to say it's a tough call, because you got two central banks that both seem to be kind of in the direction. And Frank, I want to come to you on this too, because if you remember, 2022, it was all about which central bank is going to rate hike sooner, faster, more frequently. And of course, the dollar really steamrolled ahead because it saw a massive amount of rate hikes in a very quick succession. Now I think that the tables have turned a little bit. Now the question is, who's going to rate cut sooner and who's going to rate cut faster? So I guess, Frank, in terms of currency side, is there anything that sticks out to you? I think we've talked a little bit about the Bank of Canada perhaps being one of the first ones to act. Now that we've flipped the script, we're now looking at things from a rate cut race rather than a rate hike race. What do you think about currency wise? Anything stick out to you?
I don't really know what any central bank is going to do, because the Fed and all the other banks talk about how it depends on the data, but I know that they're going to do what the Fed does. And if the Fed is going to stay the same, unchanged, and if they're going to talk about cutting rates and doing that, then other countries will do the same. And I don't know what the rate at which other countries will do it, but I think that dovish tone will happen at pretty much the same time around the world. And it will then ultimately be, I guess, more so bearish on the dollar, just because the dollar is kind of that safe haven. So if you have euro against dollar, pound against dollar, CAD against dollar, those are going to be the ones that I think will be stronger. So that's where I get that risk on sentiment, is because we've been hiking all year or most of the year, and then the other countries have followed, BOE, BOC, and now we paused, they paused. The second we talk about cutting is the second they're going to talk about cutting, and then when we cut, they'll do the same. So a lot of countries can't really afford higher interest rates, borrowing costs and stuff. So I think it's going to pretty much be at the same time, but having said that, the dollar is going to be the weak one out of them all because
Well, here's a
not-
question for you, Frank, just to throw one into your commentary. Talk us through this dollar yen pullback, because you made a good point. They're going to kind of generally move together and follow each other in the western side of the world, but maybe not so Japan. Japan talking about getting their interest rate above zero. So what do you think about this pullback on UJ?
You know, they've done this before, and I think I might have got fooled again by the BOJ, where they talk about eventually being more restrictive on monetary policy, and then they say never mind, and then we get a move like this. So I was short UJ, and it came all the way down to my TP, didn't hit it, or didn't execute, I guess, for some reason. I stayed in, and it closed me out for a stop loss. And that was one of the more disappointing trades I've ever had. But look at this recovery. It was just this flash sell. And then it was just like, oh, you know what? Never mind. So I don't know. This could just be pure manipulation. That was a lot of money to move that. And obviously it doesn't look like the sentiment has really, what the BOJ said has really impacted it, because look where price is now. It's pretty much paired this entire candle. So I don't know. They could just be flat out lying, or they could, if they're serious, then it is that sort of downtrend idea that I'm hoping for. But they could just be saying, they could be on their usual stuff again. So
Ivan, I feel you have something to add to this commentary. You're the yen guy. So what's going to happen with the yen? What do you think?
It's going to weaken. It's money. I wouldn't call it money flow, but it's weakening because pure market-wise, or I don't know what to call it, is that we have gone to 142 very quickly. People will be afraid and exit their sell positions to get a better price. So yet again, this is just another one. This is just the opposite of what gold is. So we need to learn ourselves this pattern. And when you have that candle all the way going from 143.50 to 142, 141 something, that in my book is too much volatility too quickly. It is going to slap you one way or another. I learned that the hard way. And then you're going to get a much worse exit because you didn't get executed. Okay. But this is what I call high volatility market racing to target. And if you're not out by the target, wherever that target is, you fail. Sorry, you get a worse price, right?
Yeah, and I want to add something too. Seasonally, we try and keep this in the back pocket pretty frequently. Chandler, if you show my screen for a second, I've got UJ pulled up here. I think this is kind of interesting. Pretty much flat for the month of December. However, it's been down quite a bit, UJ specifically. But I want to point to, looking ahead to 2024, January, in the last 10 years, what we can see is there's been an average of a 0.92% decline on USD JPY. So it's kind of interesting to point that out. At the same time, a comparable market, very much to Ivan's point, cross-examining things like gold and UJ and the 10-year yield, for example. Historically, on the last 10 years, the blue chart here, we must have had a big pop in the last 5 to average that out. But the last 10-year average, 0.59% down in the month of January. So I guess my point is, seasonally, perhaps there's a little bit of downside coming for the UJ pair. I think, Frank, although the sell didn't quite work out, and I think you might have gotten robbed a little bit there. That's really unfortunate. You didn't get triggered on the take profit. That sucks, and it's definitely happened to me as well. I think what's interesting is that this pullback, in my personal opinion, I am dollar bearish, and I cautiously yen bullish. It's hard for me to even say that because I've been so bearish on it for so long. But you
Well,
know,
like,
I
if you
guess
think about it.
go ahead.
Oh, sorry. I thought you had finished your thought. Go
No, go
ahead.
ahead.
I was going to say,
Go ahead.
if you think about it, we're waiting for these CPI numbers. Obviously, we're not going to hike anymore this year, at least, and this could just be a setup for further dollar shorts, and this could be a setup for gold longs.
Mhm.
I feel like the more gold sells, the better chance we have at getting a good value, because we were trying to get in. I was looking to buy gold somewhere in the 2000s range. This was before
Mhm.
it broke the highs, though. It was like somewhere, if it broke this high, I was going to look to get long, and I kind of missed it. I didn't get long, but it would have worked out pretty well. But now that it's down here, it's like, well, I mean, I was trying to get in at 2000 with the same sentiment. Now we're at 1980s. I feel like we're just gonna have to let this move run a little lower, just let the selling pressure play itself out. But I think that what you're saying is, continue the trend dollar bearish, and I
Mhm.
think that's what it's kind of setting up for. And I guess that's also what I'm hoping for, so it could be biased, but
Sure. No, I think it's worth mentioning. I did also pull something up just to take a look at while on the topic of the yen. This is the week to week chart on USD and JPY COT data. It's still not quite there in terms of smart money. Smart money still seems very heavily net short on the yen. But this will be interesting to check back in on in the future weeks to see if perhaps the yen shorts kind of come off and yen longs come on. It'll be interesting to watch what smart money does, but nothing signaling too much of a reversal just yet on the yen. But I imagine that could shift as time goes on and as the yen potentially strengthens due to commentary out of Bank of Japan. But again, to your point, Frank, it's a little bit of fickle. They've and Ivan, you've talked about this many times, right? Where we get these comments from the Bank of Japan, market reacts, and it completely rips back the other way. Do you think that it's possibly shifting in narrative from what we have seen? What do you think?
It's 100% possible. But what also is possible today is that we looked at like 3 teens today because nobody has a big beard. But other than that,
That's true. Well,
other
Ivan,
than
you can
that,
grow a beard. I can't grow a beard. So why don't you have a beard?
I went to a party yesterday. A Christmas party. I needed to be.
You had to look professional.
proper. Yeah. I don't know. It was just
got
some Christmas party, but we're not lots of nice food. But what was the question again? Yeah, I
Bank of
think
Japan.
so.
Are they serious?
Yeah, no, not really, because what they have said now, they're going to wait until February. So that's kind of like, well, the market took that we're going to hike soon, or end the carry trade soon, but they also said we're going to wait until February. So they are kind of playing both horses at the same time, see what the market does. And now they have gotten way, way much stronger than they had previously. Like, remember 150, 151, 152? They were shouting. Now, have they shouted lately at 142, 142? No, not really at all. So they got what they wanted in the end from Powell, actually. So I think they're going to hike or change their policy. Their latest CPI does not support changing policy. So to be honest with you, it can still be a bit of wingle, twinkle going forward. So more fun ahead.
Sure. Fair enough. Well, guys, we'll call the show there. Thank you both for joining me. And let me just let everyone know that if you guys don't already have Ivan on your YouTube subscriber list, make sure to check him out. We'll be dropping his channel link in the chat. And also, you can find Ivan, Frank, and myself all inside of our Discord group. This is a great week to join us. If you're not already inside of the Discord, Ivan will be doing his coaching webinars, and all three of us will be sharing trades that we're interested in taking. You can read up on the full breakdowns, explanations, entries, exits, all that good stuff inside of the group. And like I said, Ivan does coaching webinars throughout the group. If you're already a member, make sure to be joining those VIP webinars. Just head out to the education section and you'll be able to watch back the ones that you missed, or join him live when he gets going inside of the group. So come join us if you're not already in there. Ivan, thank you for joining us on the show, and we'll see you back on the next one.
Thank you very much for having me.
Thanks, Ivan.
All right. And Frank, same thing. There we go. Kick them both out. Get them out of here. Thanks, guys, for coming on, Ivan and Frank, as always. Just a little bit of a heads up, guys, in terms of this week ahead. We do have a really important news week. If you are just tuning in, we will be doing a CPI live stream tomorrow, which should be going for quite some time. We will also be covering on Wednesday. There's a big day. We have PPI in the mornings, followed by a federal funds rate decision in the afternoon. Couldn't really ask for much more volatility than that. So we will be very much active. Like I said, if you're not in the Discord, come join us. This is a great week to come trade alongside myself, Frank, and Ivan. We are all going to be sharing our moves and executions inside of the group. So if that's something you're interested in, again, click the link in the chat. If you send us a direct message, you'll be able to chat with someone on our team. You can get pricing details. You can join us for a month, a year, for unlimited time, whatever you'd like. Just message us. We'll give you information about the pricing options, what we offer, what we do, what we share, all that sort of good stuff. Just chat with us and we'll go from there. All right, guys, that's going to wrap up the stream. Thank you very much for tuning in. Also, by the way, with that, you can also find information on the EDGEFINDER. I know we talked at length about COT data today and that sort of thing. So if you want those tools, message us. We'll get that set up for you. Thanks for watching. Have a wonderful rest of your day. See you guys. Hey, A1 Trading Show fans, Merry Christmas and Happy Holidays from myself and the rest of our team here at A1. And I just want to offer you a little bit of a holiday special gift. We just brought back EDGEFINDER free trials. You can now play around and try out our software totally free by using the link that's in the description and being dropped in the chat right now. Check it out, totally free. And again, Happy Holidays.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.